What's going on, everybody? I hope that you are all having a great day. We are officially live here on the YouTube stream. And man, do we have some epic stuff to share with you today. Now, a very big question, a popular question that everybody is asking. Will the housing market crash? And what will be the thing that causes it to crash? And how much will it crash? And is it even going to crash? So many questions that everybody is wondering. I know people, clients of mine, who can't wait until it crashes because they're trying to jump in and purchase. I also know clients of mine who say, I can't wait for a crash to happen. I gotta move today. And I also have clients of mine who say, I am not touching a single house right now. I'm waiting. I'm going to watch what's going to happen, and I'm going to play it out day by day and see how the news and the reaction of the markets are. Now, for all of you guys who are joining in today, number one, thank you so much. It's a Saturday, and it is 12:15 p.m., yet you are here ready to get educated, to enjoy some content, and as well as kick back with me and talk one-on-one with each other. Now, I go live because I answer your questions directly. I spend the time at the end, in the middle, and in the beginning of the live stream to answer your questions. That's why I go live every single Saturday. And then I upload twice a week, Monday and Thursday. So you guys need to check those videos out if you haven't already. Now, we already got people jumping in. Everybody's saying, what's up, what's up? That's awesome. Now, I'm going to ask you guys to do something for me. It is a favor that's going to help you. Everybody, tell me in the comments below right now what state you live in and what city you live in that state. The reason is because every market is different. And when I talk to you, I want to know what market you're talking about, what market you're referencing to. I'm in Dallas, Texas. So I'm going to start real quick and I'm going to say Dallas, Texas. That's where I'm from. I'm in Dallas, Texas. Now, I want to see where you guys are from. Are you guys from Cali, from Kansas, from Michigan, from wherever? Just comment it below and let's know. We already got California, Boise, Idaho in the house. Nice. Okay, so we're already getting you guys dropping it down. Now, this is important because as I start talking about the market, you're going to be able to reference to your markets, and I'm going to be able to also give you input on your markets. I know my market very well, and I do know other markets as well, but probably not as good as I know my market, which is obvious because I live here. Frisco, Texas from Jeffrey. What's up, Jeffrey? I was just in Frisco maybe 3 days ago. New Mexico, Monterey Park, Cali, Tucson, Arizona, Houston, Texas. Wow. New Jersey, Sacramento, Cali, Montebello, California, Logan, Utah. Nice, nice. All right, so people are dropping in right now. I love it. Guys, if you're watching this and you're excited, you're getting any value, it's for free. Hit the like button. What that's going to do is it's going to pump this video to other people so they can see this video. They're going to join with us, and it's going to be a huge discussion in the comments, and that's how we're going to have so much fun. So hit that like button. I would really appreciate it. We're already over 50 people live with us. That is massive and very quick. Okay. Now we have this week, guys, we're talking about the markets are ridiculous. We're talking about mortgage interest rates. We're talking about moratoriums and the eviction moratorium supposedly supposed to end June 30th, 2020, which is exactly 25 days away from today. We're talking about generally, this isn't even about this video, but just generally talking about what's been happening in the stock market, specifically AMC, specifically what happened yesterday on CNBC, I believe that's the news outlet, specifically naked shorts, where they're basically, the hedge funds are selling short, they're shorting stocks that aren't even there. So they're shorting AMC, assuming there is one stock of AMC, they're shorting 5 of that same stock, which is kind of pulling stocks from thin air. But I'm just going to touch on that a little bit, not going to get into full detail because we're talking about the housing market right now. So it's been wild. I had a closing yesterday for my client. It was yesterday at 11:30 a.m. They just purchased a new house. Now, you guys got to understand, I have clients who are purchasing houses. I have clients who are not purchasing right now. I have clients who are just waiting. And I have clients who are dying to purchase because they're scared. They're FOMOing, fearing of missing out, saying the markets are going to get even higher and higher and higher, and it's not going to come down. Keep in mind, I am in Dallas, Texas, and there's a lot of talks that Texas specifically will be and is recession-proof. That means that it's very strong, high demand, millions of people moving in here, great growth for jobs. Big companies are coming down here. So they're saying that we have recession proof over here in Dallas, Texas, which is a good sign for us, of course. And that's why we've been seeing the markets exploding over here and very tough to get our hands on. Guys, if you're watching this video right now, it's supposed to be 1080p HD. I spent a lot of money on the equipment to make sure. So if you guys aren't seeing it HD, make sure you click that HD button so you do see it HD. We got Liberty saying listings are increasing here in Utah. Man, I can imagine. Now listen to this. Mortgage interest rates are screaming a warning. This is why I put that in the title. It is literally what is going to define how the housing market shifts and moves. There are so many smaller catalysts of what can happen in the housing market. There is the lumber shortage getting better. There's new house costs getting lower because there's not that much material cost. There's supply chain getting caught up. There's builders able to build enough for the people who are demanding the houses. That stuff is, in my opinion, a smaller catalyst for the housing market to either cool it down or make it go down, right? But the biggest one is the mortgage interest rates. What's going to happen when the interest rates stay low or go up? Now, we're promised by the feds that 2023, 2024 is when they start messing around with the interest rates, maybe even late 2022. We're right now in mid-2021, so we still got time, right? 6 months, a year, year and a half, 2 years. So that's why there are some people who talk to you about the housing market, and they actually tell you that we could see the house prices continue to go up for the next year, 2 or 3 years, because they're referencing it based off of the mortgage interest rates, okay? Now, listen to this number right here. This is something that I quickly ran down for you guys, and it was a number that I'm running off of interest rates to let you see why interest rates play a huge factor on house prices. Are you ready for this? Okay, so we got right here a house price for $500,000, okay, at 3% interest rate is going to cost you for $500,000 of a house at a 3% rate, which is the current rates right now. Depending how good your credit is and so forth, these are the current rates. At 3%, it's going to cost you $2,108.02. So $2,108, plus or minus by a little. Okay. That same house that you're going to be paying for $2,108.02. This is mortgage only with interest. This isn't your property taxes, your insurance, your private mortgage insurance. This isn't any of that stuff. This is just generally the mortgage and the interest rate together. You're going to pay $2,108.02. If that same house were to be purchased, if the interest rates were to go up to 5%, remember 5% isn't far-fetched. We're at the low threes right now. I have some people who are signing off at 3.5%, 3.6%, 3.7%. If you get closing costs and down payment assistance, you'll be at 4% already. In this market where we're considering it's the lowest point in interest rates. So 5% isn't far-fetched, and it can happen and it will happen. There's no avoiding it because the inflation concerns, they have to balance it. When inflation gets too chaotic, they raise the interest rates to cool down things. So a $500,000 house at a 5% interest rate is going to be $2,684.11. From 3% to 5%, your difference per month on your payments will be $576.09. Wow. Per year, it'll cost you $6,913.08 if you were to get a mortgage at 5% versus 3%. Almost $7,000 more per year, almost $600 more per month by just the 2% increase in the interest rates. Okay, so what does this mean? This means that to match the monthly mortgage rate that you guys want to be matching. So right now you're like, I can get a $500,000 house at a 3% interest rate, right? In order to match that, if you still want that same monthly mortgage of $2,108.02. If you want to match that with a 5% mortgage, 5% interest rate, your new purchase price is going to be $393,000. Now, I hope that I didn't lose you, because that's important that I don't lose you. Let me recap with you. If you wanted to buy a house and match a $500,000 house that was at 3%, for the interest rate. You want to get that same monthly mortgage payment, which was $2,108.02. If you want to match it when the mortgage rates are at 5%, your new purchase price for a house will be $393,000 plus or minus a little bit. The difference of the purchase price is $107,000. This means if mortgage rates go from 3% to 5% based off of a $500,000 home, then theoretically, the house prices, if the rates go up from 3% to 5%, should drop from the $500K range to the $393,000 range. You guys caught that? That's if you're trying to match your mortgage rate, your mortgage payment that was once at 3%. Now keep in mind, guys, this is exactly why I share with you a lot that for every 1% the interest rates go up, every 1% mortgage interest rates go up, the housing market will go down 10% plus or minus depending on your markets. Okay? So this is to tell you that if interest rates do go up, you will see house prices going down if there is supply on the market. That's another problem that we have. Demand is still insane, supply is still very low. So if interest rates go up, yet the supply is still very low, then the price will hold steady, maybe dip just a little, but since there is no supply, that economics of demand comes in and you can't beat that overall. You guys following with me? If you're following with me, hit that like button. If you're not following with me, hit that like button. Either way, hit the like button, guys. Okay, so this is why the mortgage interest rates are a huge concern for the world. Now we're talking about house prices, but keep in mind, mortgage interest rates are going to affect the housing market. But in general, interest rates, if they were to go up, this is a huge concern, not only for the housing market, but also for the stock market, also for the broad markets. Because when inflation starts to get close and inflation starts to pump up prices on items, interest rates have to be raised so it can offset that. Now keep this in mind. Growth stocks. Growth stocks are basically stocks that have valuation based off of the future. And that valuation is coming based off of the interest rates. And if interest rates are good today, growth stocks are going to be doing good because they really don't have any income coming in or much profits. They're based off of the future income because they're considered growth stocks. So if interest rates shoot up next year, those growth stocks that were doing extremely well because the rates were low are now going to get hammered and are going to go very low in price. Not sure how much the price will go low, but it would go down because now their valuation is going to change based off of the new interest rate, which will affect them because they're basing it off of the interest rates. So this is a huge thing, not just in the housing market, guys, but it's a huge thing in the broader markets because if interest rates move, the entire market moves. Low interest rates is what motivates the entire market. For you to take on more debt, for the markets to take on more debt and keep things moving. If things don't keep on moving, then there's not going to be much income, outflow, inflow into the markets, and we don't want that. If you guys are following with me and you guys are enjoying this, hit the like button. I'd really appreciate it. Now I'm going to jump in right now. We're 15 minutes in the video. I'm going to jump in right now to y'all's comments and let's see what we got going on. All right. We got Sacramento Cali saying, I don't see any new listings and prices are going up too for condos also. Low supply, high demand. It's going to keep happening. Plus the low rates. Tampa is the same, house selling like crazy, I bet. Dallas population, Giorgio Lambo says, Dallas population will require more services like police and hospitals, increasing city budgets. The Dallas population is growing so much, I believe they're going to start raising the property tax rates on us more because, of course, values are going up. They're going to start taxing us more in different ways. They're going to start doing as much as they could to start to try to recoup all this that's happening and profit off of us. We're already seeing that. Liberty says, the more speculation, the bigger the bubble. I agree. Just a realtor. I'm going to be taking my Texas real estate exam. Any tips for passing the exam? Yes. I went and I think I failed the exam 4, 5, or 6 times. I kept trying to bomb it. Don't try to bomb it. Actually sit down, study for one day, 3, 4, 5 hours. Go in, be confident, and just make it happen. You don't need to get 100. Just make sure you pass by at least 1 point and you should be good, right? So that's the biggest advice I can give, is actually try to study it. Don't just assume you're going to nail it. Josh says, I'd much rather purchase a lower priced house with a higher rate, even if the payment is the same. As your income climbs, you can pay it off much faster because of lower principal. Very interesting, Josh. So he's saying he'd rather buy a house when the rates are lower. I mean, with a higher rate, even if the payment's the same. He'd rather not. So to touch on that, guys, if you're buying in this market, you're going to be overpaying. There's no choice of that. You're going to have to overpay. So you'll have to make a decision. Do you want to overpay, or do you just want to wait until things cool down and the rates go up and you possibly get the same house for a lot cheaper? It becomes your call at that point and how long you can wait. Liberty, the TBE controllers are manipulating inventory to keep prices up. That's interesting. Mortgage equals death pledge in Latin. The controller tells us that we're debt slaves to them. To be honest, I mean, we're never going to be out of the debt. The USA is built off of debt. It owes trillions and it has debt just cycling in it, and that's how it's built. But even if you paid off your assets, even if you paid off your house, even if you paid off whatever, you still every month going to have to pay your property tax. You still every month going to have to pay your income tax. You still every month you're going to have to pay money based off of even making money, right? Every month you're going to have to pay your income tax, in the sense of once the end of the year is, you're going to have to go file and you're going to have to pay income tax on that. So it is very crazy, but you'll never really get out of paying. There's always going to have to be paying. Tam Jam, if interest rates rise for consumers, will the rates also rise for the hedge funds and corporations who are buying homes at 0%? Should be illegal. I don't know if hedge funds are even buying at 0%. There's no way they're going to get 0% loans. So if interest rates rise for us, they rise for the entire market. That's why hedge funds even panic when the topic of inflation comes up, when the topic of interest rates go up. That's why they panic and they start clicking the sell button, or they start pivoting their assets or how they do things. In New Mexico, the price is going up, so just wait to cool down the market. The crash is coming soon. See, if interest rates go up, things are going to cool down, but simultaneously, if supply stays low, demand stays high, it's probably not going to be as clear as it should be when typically there's more supply. All right, guys, we are breaking into the 20-minute mark. Thank you all so much. I need to see as many of you guys as I can hitting that like button and showing your love and support. We have over 530 plus people on the Discord channel. Go to the description of this video and join the Discord. It's for free. You don't got to pay anything, and we talk daily in there about real estate, money, and business. Guys, go check that out. You're not going to lose anything. Go check it out and join the Discord channel. And more than anything, if you got any value from this video, I'd really appreciate you guys hitting that like button. It would mean a lot. Yash says, what's your view on gold? You can never go wrong with gold. Having some capital, some of your portfolio in gold is never bad. You can have it, you can stash it, you can save it. It's just the hedge against anything that might go wrong. It's not a bad idea to have gold, and I think that it's good to have some gold. Just a Realtor says, I have a strong feeling that Texas will be just like California in a couple of years. I agree with you 1,000,000,000%. And that's why the market's blowing up so much. People are even saying that's why prices keep going up, because people in Texas are fearing it's going to be like Cali, and they're trying to get as much assets as they can in real estate. All right, guys, thank you so much for watching. This was a quicker live. You guys are amazing. Much love to everybody. And look at this cool thing that we got. Join our Discord. The link is in the description. It's important. We got you in there for free. And what you're going to get is daily talking about real estate, money, and business. You're going to enjoy it, I promise. So go check that out. And then this video, hit that like button as much as you can. Click it once, actually, not again, because then it'll not dislike, but it'll just come off. Keep hitting that like button. I appreciate it, guys. Support. And thank you all for being here. Be safe and understand that the markets are wild. So stay educated on it, and that's going to bless you. All right, guys. I'll see you all later. Take it easy. Bye-bye.